Quick sound check. Quick sound check. Perfect. Good evening, everyone. Good evening. Good evening. Welcome all to this session. We're going to be talking about market structure, market nuances. So we wait for a few more people to come in and join us. So those of you who are here, feel free to talk a little bit more about what you do in the world of derivative trading. What is your goals and how long you have been in the derivative industry. I'll share a bit about myself also, and together we can navigate the streams of the market together. Right, I've got the comment section open and I am listening and I'm hearing all of you. I'm reading also all of you. So feel free to exchange some thoughts about what you do and how you got into the business of trading and what exactly derivative trading is to you today. Let's just have some activity going on in the comments, and we'll start in a couple of minutes. Evening, good evening. Good evening. Good evening. Good evening. Good evening. Lovely to get all of you here together. Lovely to hear all of you talking about yourselves. Keep the conversation going. We'll start in a couple of minutes. Let's wait on a few people more to join us, and we'll be talking about market structure, market nuances going forward. Good evening. Good evening, guys. All right, so I hope everyone is in and everyone is comfortable, and we begin this session where we're going to be talking about the structure of the markets. Now all of you know that a new month of November has begun, and we are scheduled for some major events right at the top of this new series of November and a new calendar month of November, and everyone has been talking about that need not be repeated. But there are these US elections which results we should be getting on Wednesday morning. Hopefully if there is no major issue with the counting etc. and any kind of things which happen, we should have a winner declared by about 12:30. That's noon our time. Then we have the China factor. Then we also have the Fed, and there are a lot more events lined up for the rest of November. Now these are events, and the market has got its way to look at each of these events. In fact, what the market does is the market builds up into the event, and it gives a reaction. And what it does is sometimes that reaction is knee jerk, in the sense it's only for those 20-25 minutes, and then the market continues to do whatever it wants to. Now remember, it's not about the event, it's about the market's reaction to the event, and that is what we are wanting to track as derivatives traders. Right, now the reason I mentioned about these three events is because all of them can play differently to each other. So at the moment the market is pricing in a Trump victory, but you know about the election cycle, nothing is certain till the entire election is done and dusted. And we are all expecting a winner, but you never know. There could be a situation where it could be contested, and the markets are not prepared to work with that information. What could also happen is that the scheduled announcement of the result could be delayed by virtue of whatever, okay, they work that US election very differently. So that's a factor, okay, for you to consider. And the market, okay, is also baking in a Trump victory, but it could go the opposite side also, and the market, okay, would react differently if the expected outcome is not there. So those are the possibilities, okay, you got to address as you step into trading on Wednesday, right? Now, if the market is baking in a Trump victory, the China factor works opposite, okay, to what Trump is doing, right? So as soon as, okay, Trump comes in, the first word you're gonna hear is this word called tariff. This happened, okay, in his last presidency, and that is gonna that's gonna send a different message, okay, via the China route, which is, okay, adding a lot more stimulus, okay, to the kind of flows, okay, which we have been seeing, right? So just look out for that equation. So even though Trump victory is positive for markets, the China reaction could be different. That is why I'm saying, okay, everything could work a bit differently over here. And the third factor, okay, is of course, okay, the US Fed, okay, results, okay, which the Fed outcome, okay, which is going to be there in this week as well. Now, I was under the opinion that when they did that 50 basis point cut earlier, about in the month of September, that was a little bit premature. Okay, the market, okay, was, okay, got pleasantly surprised. Now, okay, they are stuck, okay, with that 25 basis point hike, okay, going 25 basis point cut going into November. So we'll see, okay, if the new presidency, okay, can impact that decision as well, right? Now, what we say over here is this market's reaction to all of these events which are going to unfold is based on existing positioning or based on existing inventory which is built up ahead of these events, right? So like say, okay, the market, okay, does not the market, okay, gets that Trump victory. What does it, okay, do, okay, with that Trump victory? Does it rally, okay, strong, hard, because, okay, he is net positive, okay, for the global market scenario, right? Or, okay, it just accepts that and does nothing, okay, considering, okay, that the US markets has rallied significantly already. So is it a sell on news, or is it, okay, is it a do nothing kind of an event, right? All those prospects, all those possibilities are all there, right? We never know how the market is gonna react to a particular news event, and we've seen that oftentimes in our market also. You see, okay, you get good favorable outcomes, like your stock results, for example. Stock is done excellently, market sells off, right? And you have an event, okay, which is positive, super well priced in, but everybody knows about it, and it becomes a sell on news kind of an event. So what we are seeing over here is the inventory getting adjusted to a piece of information which the market was anticipating, was expecting, and working as a net result of that, right? Now, I've been in the world of trading, okay, for a long time, the derivatives trading, about a decade and a half. And I'll be honest with you, for those of you who do not know me, okay, my name is Shai, and I do not come from a financial background. Okay, I have been, okay, on the same boat as many of you, okay, talking about trading these markets, discussing, okay, what these market situations are. But hear me out, okay, loud and clearly when I tell you, okay, that I didn't have a financial background when I started off in the market. And because, okay, of not having this financial literacy, because of not knowing, okay, what the markets were up to, I lost a lot of money to the markets. I made losses, and initial period, okay, was a period of turmoil for me in the market. Now, I've been in situations, okay, where I've, okay, been frustrated, where I've not understood how markets work. And we've all been on that boat, right? We have always almost a similar kind of journey, all of us as traders, right? And because, okay, we come with not knowing a lot about what the markets are and how the markets do, and we respond, okay, to the world of trading, uh, it works a little bit differently, okay, for many of us, right? The first thing, okay, which strikes us, okay, when we get into the world of trading is that we do not understand how the markets pull or they push and how they work differently. What I understood very early in my trading life as a trader of derivatives, was that I looked at every single thing, okay, which was happening, and the reason, okay, I made losses in the beginning, and I moved away, okay, from all that I knew, okay, as a derivative trader was trading, and I walked away, okay, from the path a lot of traders were taking when they first started off, and I started to look at why, okay, some traders were making money and some traders were continuously losing money to the markets. And what I understood through all of that was most of the traders who made money in the markets had a very good understanding of market nuances, had a very good understanding of market structure, and they knew precisely where to enter, where to exit trades. And because of this understanding, they could work with their that setup or that strategy which they had. They could add a lot more confidence and a lot of money to the strategies which they were doing. See, the thing is about confidence in market, it grows over time. And once you know your strategy is working, you can always build up on that. And I found out that all these guys who were trading with a lot of money, with a good strategy, they had a plan up their sleeve and they knew exactly what they were doing. So I changed myself as a derivatives trader from trading all over the chart, to finding pockets and pieces on a chart where the largest reward was for the least amount of risk, and we call it the risk to reward ratio. And I saw on charts, that is that a lot of traders, the big traders, they worked at certain advantageous points in the market where the risk was minimal and the reward was maximum. So I made it my mission to track where these big traders were trading, because they had people who were looking at charts for them. They had people who were studying the fundamental news for them. They had people with a good understanding of the market scape, these things like Trump and Fed and everything. And they had people who worked all this information for them in the background. But I was focused on where these traders were adding their trades, where they were entering and where they were exiting that trades. And by following them over a period of time, I understood why these traders are making money in the market, right? So for me, that financial literacy was all about tracking the footprints. I call them footprints because they leave tracks and everything which is done, including somebody who's trading 2 lots at a time, or even somebody who's trading 2,000 or even 5,000 lots at a time. Everybody leaves a footprint in these markets, and these financial instruments we work out of. Everything has to be registered at the exchange, right? So we call them footprints. And tracking these footprints is how I understood how big money was making money in the markets, how big money was trading the market, right? So our entire setups over here, our entire way of communicating with you, is about not seeing what the rest of the market is doing, not understanding or not even focusing on what 90% of traders are doing, but bringing that focus on identifying within that chart where 10% of the big traders are. And they are just a small minority. They are just about 10% of the market. And they may not all be possibly successful in each and every single trade. And historically speaking, not every single trader, even if it's a big institution, gets all of their trades right. Nobody can win all the time. But percentage wise, if you keep tracking what the big money is doing, and you found a method of tracking what the big money is doing, your understanding of the markets becomes a lot more clearer. And now you're betting with the people who know how to trade. You're betting with the people who are trading big, and your chances of making money are that much more bigger. So what we've done is we made it into our mission to remove every single thing which does not work for us, and to remove every single thing which most of the market people are using, right? Because all that has led to a lot of people losing money to markets. And we work with what works, and we work with a system and a strategy which is focused on tracking the big money of the market. Right now, we do that through something called a market profile chart. And this is a chart which is there on your screen right now. We call it a market profile chart. And this gives you an understanding of market structure and what we call market nuances, where a lot of traders know how to operate or how to change their bias during a week or during a month, right? Now, the chart on your screen is a monthly profile chart of the Nifty, and today we'll focus our attention on the Nifty spot, and we'll try to interpret what this market is telling us and what it wants to do ahead in time. Right now, nobody can predict the future. Okay, and I can tell you a few things, okay, about what I expect to happen in the future, but I do not know, okay, whether it would happen, right? But the word, okay, I'm using over here is we are trying to anticipate, okay, what big money would do, right? And that anticipation is built around data, is built around facts, is built upon existing inventory in the market. So if that existing inventory and that existing holding of the market, and I'm speaking about a derivative sector over here, if that existing holding, if that existing inventory stays as it is, then the chances of the market moving to the anticipation we built up or to the way, okay, we project it is higher. But if that inventory changes, if people who are short suddenly close their shorts and go long, the market is going to take a U-turn. Or people who are long suddenly change their longs and go short, the market is going to take a turn again, right? So we saw in the month of October, people who are long, they close longs and they build shorts. And right through the month of October, in fact, very, very early in the month of October, I told you that the market, okay, is going short. The structure of the market has broken. And this is the profile of entire month of October, right over here where my cursor is. The entire month of October trended lower. And today, okay, in November, okay, we are below the series of October, right? Now, you can safely look at this and say, okay, that the seller is in control of the market right now. And this is on the monthly time frame because I have a monthly profile chart open on screen, right? Now, the important distinction over here is understanding, okay, what time frame is in control of the market. And what I do is generally, okay, we work when we're trying to understand market structure, we break it down, okay, from a monthly to a weekly to a daily, and then finally, okay, a hourly, a 30-minute, 60-minute, or then a 3-minute and a 5-minute, okay, time frame, even a 1-minute time frame if the market is very clear, right? So this is a monthly profile chart. And the first thing, okay, which you should tell you as of right now, the 4th of November, okay, the market is below October lows, right? And if you see this gray shaded region where my current cursor is, I hope, okay, everyone can see my cursor on screen. Give me a quick yes, okay, if you can see my cursor on screen. Yes. Right, so there's this black shaded region which is there, okay, on the chart, which says 25032. This is October value area high. Yeah, okay, thank you guys. Okay, so 25032 is value area high of the series of October, and I've got a nifty spot TPO chart open. And if I move down, I've got a value area low at 24096, right? That is the value area low, and this entire gray shaded region, this grayish black shaded region, okay, is what we call the value area, right? Now I'm going to talk to you about two universal laws of market profile, okay, which is valid, okay, on monthly time frame, weekly time frame, but it helps you to understand structure like nothing else over there. And if you're trading the world of derivatives, you have to, and I'll repeat that word 3 times, you have to know these two rules, right? Now, the first rule is always track the value area on a monthly time frame. Okay, and a continuation of that rule is the buyers are in control of the market above the previous profile's value area high, and the sellers are in control of the market below previous month's value area low. Now, let's understand this. Okay, so this gray shaded region is what I call the value area. And let's go back, okay, a couple of months. This is the month of June. This value area high. This is the month of June. I come back, okay, to the month of June because there was a lot of inventory adjustment which happened in the month of June because of the election outcome, right, here in India. So there was a trigger for a lot of new money to come into the market, and a lot of new money came in via the derivatives market as well as the cash market also, and even the SIPs. In fact, the SIPs money, okay, which was coming in, also hit an all-time high, okay, during this months of June. So all in all, to put it in short and a concise way, you can say that inventory was majorly reorganized in the month of June. Now, this is the latest piece of info we go through, and you can see this value area high in the month of June was here, this black shaded region around 23,760. right? Now, this was the end of the month bias. The next month, if the market stays above that value area high, you can say, okay, that the market is continuing to be positive. This is the rule of market profile. So all through the month of June, we had an uptrending. All through the month of July, also we uptrended. Why? Because the value area high was continuously moving higher. August, we had a market, okay, which consolidated and the value area went slightly sideways. And the month of September, the value area high is gone up. So we had a month, okay, which made a new high, right? But let's focus, okay, now, okay, on what is immediately available to us. Okay, so this value area low of September was in the region of about 25,068. The minute the market, okay, tracks itself below the value area low of a monthly series, you have to change bias. And what is the bias? Okay, the market is gone from being on the side of buyers to the side of sellers, or you can say sellers are becoming stronger. So this is the time, okay, where change happened. We broke below the value area low and we proceeded, okay, to build value lower. And that's why, okay, the month of October was a downtrending month. Now, what you would like to see in the month of November is this market, okay, whether it wants to stay below this value area low, right? Now, these are fundamental rules. We do not, okay, play against these rules. Okay, they have helped us to understand, okay, the most important thing, okay, in our market is whether buyers are stronger or sellers are stronger. And what happens, okay, when buyers are stronger, you can say demand is higher. And what happens when demand is higher? Price moves up, right? And what happens, okay, when supply is stronger, you can say sellers are stronger. Same thing, supply is stronger, sellers are stronger. And when sellers are stronger, price has no option but to go down. Okay, and price, okay, has to probe lower till we say, okay, that it finds new buyers and the process of moving lower stops, right? So first thing, okay, in November, you watch this. Now, you can qualify this rule a bit differently. And suppose, okay, you're a short-term trader. Okay, instead of focusing only on the value area high and the value area low, what you do is you focus on the region, okay, which is highlighted within the value area high and the value area low, and it is the green and the pink shaded region. So we pick up 2 points within the value area, and one of them, okay, is the VWAP, which is in green, and the second one is the POC, the point of control, which is in pink. Now this is again on the monthly time frame. Now, what is this VWAP? The VWAP is the average of all the buying and selling which happened for the entire month. And POC, the pink one, is the point of control, or simply put, okay, the area where the largest volume was traded through the entire month, right? Now, once you understand that, now again, okay, you can qualify that bias a little bit more better. So instead of saying the buyers are stronger above value area high, yes, they are. But you can also say that the buyers remain strong above the VWAP of the previous month, right? And to put a little bit more context to it, you can also say that the buyers remain strong above the POC of the previous month, right? So let's understand this with the same principle. The month of June, the VWAP was here. Okay, this is my VWAP. 23,280. My POC, the pink line, was at 23,528, and the market, okay, in the month of July stayed above it. So you had to, okay, adopt a buy position. In the month of August, the market was at the VWAP of POC and at the VWAP of the month of July. You can say the VWAP was sideways, the POC was sideways, and the market, okay, was in a sideways pattern. But as soon as September opened up, we not just traded above the, we of course, okay, traded above the value area high, but we made a full month of trade above the green VWAP and the pink POC through the entire month of September. Hence, you can say September was a trending up one. But wait, okay, what has happened here in the month of October, right? Immediately, we have broken below the pink POC, which was at 25,400. And we have broken below the green VWAP, which was at 25,376, so somewhere around that 25,400. Now, when we break below the VWAP and POC of a previous month, should we remain buy side positive? Absolutely not. In fact, okay, if you go back, okay, to my timeline, I immediately told you, okay, now this is a month, okay, to adopt a negative bias. and we were short, okay, from the 2nd and 3rd of the month. Now, this is market nuances. Will it continue for a long period of time? I don't know. But you continue holding that bias, okay, till you see a situation where the market changes, right? So as we move into November, what do we know? We know, okay, that the VWAP of October is what? 24,836. And the POC is 24,400. And this POC at 24,400, which is on the Nifty spot, becomes my most important number as I wait, okay, for that Trump election data, as I wait, okay, for that US Fed data, as I wait, okay, for whatever comes out of China. This 24,400 on a monthly time frame becomes my most important data. And what is my bias over here? I'm going to continue to look for sellers coming in the market as long as this market stays below 24,400 on the spot. The market is suspect. And a confirmation of that is this market, okay, staying below value area low. Now I know, okay, the market, okay, is 100% okay in control of sellers, and I'm confident of adding to my positions because the market, okay, is dominated by sellers. Right now, this is the monthly time frame. This does not mean that if the market stays 5 minutes above 24,400 spot, my bias is abundant. Right? Try to understand. This is formed over a period of 20 trading cycles, 21 sessions. So it does not mean, okay, it's formed, okay, over a period of 5 minutes or 20 minutes or 30 minutes. Typically speaking, for you, okay, to change your bias, you'll have to see at least one full session of trading above this POC. And your period of hold is not going to be a trade of 5 minutes or 30 minutes. It's going to be a period of 30-35 minutes, right? So you see this and you monitor this on a monthly time frame, but you zoom in into a weekly time frame and you see if the bias, okay, which you have established is ongoing or not, right? So what do I have in my weekly time frame? The same set of rules. If the market is staying below value area low, and this gray shaded region is the value area low of last week, right? Now, when it comes, okay, to a weekly time frame, can you come to a weekly time frame? What you do is you do not look at the weekly of June or July or August. What you do is you understand what the market is doing relative to what it has done last week, right? Now, let me repeat that. You understand what the market is doing relative to what it has done last week, and you find out, okay, where it is trading relative to the value area of last week. So in the month of November, we are looking at the market activity of October, and we're trying to understand, okay, how this market is positioning vis-a-vis what it did in the month of October. In the month of September, we have data from August, and in the month of August, we look at data for July. I'm not going to look at the month of a new month of November and look at what happened last October, right? Because between last October and yesterday, in fact, the month of October 2024, there's 12 months of traded volume. And the most important traded volume is the most recent traded volume. In fact, okay, the activity, okay, which happened last month. So the same thing, okay, which goes over here on the weekly time frame. You're not looking too far back. You're looking at it in terms of where the activity is happened in the last week. So again, the same set of rules. If the market starts trading below the value area low of last week, which is this gray shaded region, in my chart right now, it's 24,248, equivalent to about 24,250, big round number. You didn't have a chance, okay, to be long in the market once, okay, the market started trading below this today, right? The market, okay, went into a short side trade and was short all through. And then this POC, which I told you about, the weekly POC is the same as the monthly POC, 24,400. And as long as this market stays below last week's POC, which is at 24,400, you have to adopt a short bias, right? Now, this does not mean that this market, okay, is going to be a one-way street, straight away down, okay, for 24,400, right up to, okay, those levels, okay, which people give you, 12,000, 14,000, 15,000. I've never seen the market dip 2,000 points in one line, right? And that's over 15 years of watching these markets every day. The market does not fall in a straight line. The market, okay, does not go up in a straight line. All right, that's always a zigzag pattern. So if it drops 400 points, it will climb up 150 points. and then okay, it will decide okay what it wants to do, and then maybe okay, it will continue the trend lower by dropping another 300 points, 200 points, and then okay, it will rise up by about 50, 80 points, and then okay, there's going to be another fall of about 400, 500 points. So these are the patterns okay which you have to get used to and know okay that this is not going to be a one-way directional market. The market okay takes a breather, the market takes a pause, and okay, things okay work okay differently as it works out, right? So this is okay simple market profile helping you okay decide okay how things go on. So this is the weekly time frame, and you can come back okay to a daily time frame. Now if you're somebody like me okay who likes to trade a 30-minute time frame and a shorter time frame than that, so this is okay where it is today. So this is today's profile, right? The 4th of November, and this is the Muhurat session. Now the Muhurat session okay is not to be considered by derivative traders because it's not a derivative trading session, right? It's a session okay which is created okay for people who want to invest in markets. So they have a typical period of hold of minimum 1 year, that is this Diwali to about next Diwali, and okay, a lot of us okay trade in Muhurat okay for a period of hold which is for 4 years, 5 years, okay, maybe okay we'll pick up okay something which we want to hold for the next 10 years also. So this entire activity is for longer term people. It's not to be confused okay with what derivative trading is all about. So this Muhurat session is actually to be ignored. You focus on where the volume is. Okay, and the second reason you have to ignore is because the volume is negligible in derivatives okay in the Muhurat session, right? So you focus okay on what the market was doing last week, and this is the gray shaded value area zone, right? And what did I tell you? The market is positive above the value area high and is in control of sellers below the value area low. So once it went below the value area low, okay, sellers were controlling, and all you had to do okay was to just keep checking if they were doing a good job or not, right? Now this is okay what we say understanding market profile structure and nuances are all about, right? So just to okay reassess okay what I've been talking to you all about, and I'll just quickly okay summarize it for you. Understand okay the gray shaded region, that is the high of that gray shaded region is what we call the value area high, and the low of that gray shaded region is called the value area low. And a profile, these are what we call profiles, structures. A profile okay which continues to trade value area higher is called an uptrending profile. And if it goes okay sideways like this is called a sideways market because value is sideways. But in uptrending profiles, you'll find okay that one value area high and is placed above the previous value area high, and the value area low is also above the previous value area high. Those are called uptrending profiles because value is created upwards. And in downtrending profiles, just the opposite is true. Focus on where the VWAP and the POC is. The VWAP and the POC is, and the POC and the VWAP okay will tell you a lot more okay about what kind of a bias you have to adopt okay into your trading every single day, right? So these are just two structural inputs which should help you okay as we move okay into the month of November. So this is okay where it is today. So today's profile in market profile terms is called a B-shaped profile. And just to continue okay this conversation on market profile a little bit more, this is not a book or not even a page worth of information I've given you. The entire understanding of markets is very deep, right? And it is governed by a lot of big money in the markets who have put in a lot of money and a lot of resources to understand these markets, right? Now the one thing okay which separates us from institutions is that a lot of institutions okay they come okay to the market prepared and with knowledge, and they have a set of people okay with them who assist them in their trading decisions. So overall that entire team is very, very knowledgeable. And what we come to is we do not have financial backgrounds, and I was one of those guys okay who didn't have an education in markets before I put my first trade in the markets, right? So that went against me and I made a lot of losses because of that. And what I didn't understand at that point of time was that I was trading with big financial institutions who had absolute control over the market in terms of their understanding about each and every single aspect of the market, including the last 5 minutes. The last 5 minutes of the trade, or wherever the market was trading for those last 5 minutes, they knew exactly okay what the market was doing that. Contrast that, okay, to a trader who's just joined the markets. He throws, okay, some money in a trade, and he's trading against somebody who's 20 years of experience against him, right? And he doesn't have a chance. And that's the reason, okay, 90% of traders lose money to market, right? So the game is very different. You can think about it as we'll all love our cricket. You can think about it as a T20 league where professionals, your players, okay, from the major, okay, countries of the world, trade with people, okay, who have previously, okay, played with a plastic bat, not even a leather ball, plastic ball, plastic bat. Now, what are the chances, okay, of success against them? Absolutely nothing. 0.001. You'll get something called a beginner's luck that will give you confidence. You'll get into a couple of trades. You'll go to some YouTube seminars, okay, and everything, and you'll understand, okay, the entire retail mindset. But entire retail mindset, okay, is geared, okay, towards making you losses. The institution does not think like retail. Okay, and your best remedy or your best solution is to track institutional footprints and understand how big money is trading the market. Simple it is. Demand and supply. And who's controlling the big demand? Who's controlling the big supply? If you just focus on that, all aspects, okay, of your market are going to be clear, right? So we have, okay, this with us, okay, we have built, okay, charting. See, my education was not there in the markets. So I went to work, okay, in developing systems, okay, which helped me in my world of trading. And along with me, okay, there were a lot of friends, okay, who were always interested in what I was doing. So we built, okay, some tools, okay, to understand what we do and how to do it, and to work, okay, with these tools. And the whole focus was this, okay, how does big money trade, and why do 10% of traders, okay, make money, right? So we built, okay, this structure, okay, called the market profile, and there's a lot more, okay, than market profile over here. I have not even, okay, begun to talk to you about order flow, but this is a deep financial ecosystem, okay, which is over here. And a lot of us, okay, when we begin, okay, we are told, okay, that you buy a stock and the stock goes up, right? And that concept, okay, is still there, okay, that the buyer of stocks or the buyer, okay, of somebody in the long only stock market via an SIP or something is the one who controls the entire market. Absolutely not true, right? The derivatives industry is a vital part of the entire sector or the entire ecosystem which is there in the market, right? Something happens in the option market, it can control, okay, the flow of the entire financial ecosystem, just the options market, right? So not just, okay, about buying stocks and the price goes up. Sometimes, okay, even, okay, buying stocks, like you've seen, okay, all through the month of October, the DII and the FIs were fighting. FIs were selling, DIs, okay, were matching the selling, yet the market was down 2,000 points. Why? Because the big money, okay, was going short via stock futures and index futures, and was short calls and long puts. So the derivative side of the market influences a lot of this. So all this is something, okay, which we have to understand. And unfortunately, okay, in the atmosphere, okay, we belong to, and the ecosystem, okay, which we surround ourselves in as newbie traders, we are not trained, or we are not, okay, led, okay, to understand, okay, how the entire ecosystem works, and how one part, like an options market, influences the stock market. Everybody's very clear, okay, Reliance is there, it's one of the bigger contributors, okay, to the market. So Reliance buys, the market goes up. Fine, understood, get it, okay, but not every single day. Sometimes, okay, the option market, okay, is going to control, and somebody, okay, who buys Reliance, okay, shorts in the future, Reliance, okay, is not going to be going up at all, right? So the derivative industry is controlling, okay, the option market also. And we have to understand all of this as a whole, not just one of the parts. The entire ecosystem, okay, should make sense. And then, okay, you understand, okay, the business of trading, right? So this is, okay, about market profile. This is about market structure, understanding nuances. I just spoke to you about value area, VWAP, but there is something, okay, like this profile, which is called a B profile. It's got the shape of the alphabet B, the letter B, and the B profile is a symbol of long liquidation, right? There's something, okay, called a P profile. There's something, okay, called a balance profile. I'll just share a third nuance with you. And it's a very important nuance, and you have to understand this also. So the third nuance is this. I told you about value area high. Market is positive about value area high, about sell below value area low. I told you about VWAP and POC. And the third thing, okay, which you have to understand is that the market flows from a balance to an imbalance. right? So a balance profile is what we call a D profile, right? So something like this on your screen right now. This was the week of June, right, where the market had initially gotten that news of the victory. The everybody knew around this point in time, the 18th of June period, that there was a stable governance would not get affected. The elections were behind us, and big money started flowing. And this particular profile is what we call a balance profile. Now, one of the rules, I've taken the right side of the screen because all of you know what happened, but I just want to project something to you. One of the rules is from balance flows an imbalance, and the previous rules which I mentioned stay true for this one. What is that rule? So you climb up above the value area high, the market is biased positively. So in this case, there was 25 400 as the value area high, and the VWAP POC was there around 25 400 540 levels, right? So the market stays positive above the value area high. Let's just understand what happened over here. So I'll add one more profile to this, and you'll see immediately that the market started trending up above this point. So this was a very short zone of trade over here. Hardly anything was here, but there was a large collection of buying and selling which happened at this zone. And from this, we got this particular profile where a buyer dominated. And this is what we call an imbalance of the market profile. And this imbalance will continue till we get another balance. In fact, right over here, the market is beginning to form another the market is beginning to form another balance over here, and it continues up, forms a balance till we get a big imbalance right here. So if I just scroll down, this is the time it started developing an imbalance lower, right? And it kept down, going lower, lower, lower. And this last week, again, the VWAP POC is there. So we were in a balance, and what we came prepared for was a move to imbalance today. And we quickly saw that the market dropped from 24,300 right up to about 23,800, about 600 points. It has dropped in one session. This was an expected move because the rule of the market profile says that the market always drops from a balance to an imbalance. An imbalance is what we call a one time frame move of the market, where the buyer and the seller were previously equal. One of them has to back away, and the market has to move beyond that, right? So all of this is an understanding of market profile. And like I said, it's not just about one or two pages. And if you're really, really serious about the world of derivative trading, you'll have to match your knowledge with the knowledge of the big financial institutions, because they're not going to make it easy for you. The only people who keep winning in the markets is people with a knowledge of markets and who have an understanding about what to do when the market presents an opportunity to them, right? And one of those guys is always those big institutional heads and those institutional fund houses. They will always they will always know what they are doing. So our rules are very simple. Understand the financial ecosystem of today and see where the big money is trading, and position yourself based on how you understand these markets. So we have a lot of these rules, and we cover all of them, and we've added a lot of learning also, because we understand that there is a little bit of an education required to process this further. So what we have is basically we've collected everything through a program where we have consolidated most of these learnings. And only for those who are interested, you can visit our eco section, where you'll get a big summary of what we have just discussed and the rules which you have to follow at every single point in time. This is an accelerated program of about 12 videos, and at a very nominal cost of about 4,999 plus GST, you can get a lifetime access to all that you need to know about the market profile. Not all of market profile, because the subject is very, very deep, very, very deep. But all that you need to know about how market profile can work for you is covered in these 12 videos. And there's another aspect of market profile, a more advanced market profile, what we call an order flow. Right? The order flow is nothing but, we talk about market profile about buyers and sellers. In the order flow, okay, we see these buyers and sellers in a live market. Now there are certain rules, okay, to identify these buyers and sellers, and we cover them, okay, for you, and an understanding about how to visualize them and how to work with them in a program, okay, which we call the VMR, the mentoring room program, where you can connect with us in a live market, and we can offer you, okay, live support on how to read and interpret, okay, these charts. Right now, back to these charts, what we have is basically, okay, an offer, okay, for Diwali. I know, okay, a lot of you, okay, were busy, okay, through the month of Diwali, and I hope, okay, everybody had a good festive season. Even I was off, okay, for a couple of days. Last night, okay, my card program, okay, was running till about 3 a.m. in the morning. But I understand, okay, a lot of you, okay, were traveling as well, having your festivities and all. So we've kept our Diwali offer going for you till the 10th of this month, right? So what is this offer? Choose an annual plan and a half-yearly plan. You will get a 6-month off on all of our charts and all of our programs. So you just have to go to the pricing page, choose annual plan, okay, and you would get. Now the advantage of these charts is that, okay, you are not getting information which is commonly available to a lot of retail traders. Right? That's very, very important. And number two is you are seeing how and when big money enters the market and influences the demand and the supply which is existing at that point of time. And those are critical moments in the market, and you have to be around, okay, to see it live in markets. And most of these big money, okay, they come in, okay, for those first 300 points, 350 points, build a part of the position and move on, right? And they wait for, okay, for another opportunity. So if you are delayed, or if you're not getting, okay, that information on time, or you get that information 3 hours late or 1 day late, it's of no value, right? The markets have become so fast that you have to, okay, read today's newspaper right now. No point, okay, reading what happened on Friday today. It's irrelevant. It's redundant, right? It's no longer, nobody reads newspapers anymore, because, okay, we have these mobile phones in our hand and we're looking at current information, current news as it happens. But a lot of traders, okay, what they do is, okay, they read Thursday's data on Monday, and they read Friday's data on Tuesday. And then they think, okay, that reading that newspaper, okay, is going to help them in trading on Tuesday, Wednesday. It doesn't work that way. The market is already seized with that information. The market is already priced in that information. And if you're reacting, okay, to old dead data, you're creating a big trouble, okay, for yourself, because the information and the inventory is already built, right? So you have to work with current data. You have to be alive, okay, to the changes of the market, especially the world of derivatives. And you have to be around, okay, when big money is entering and when big money is exiting. For this, you need to work, okay, with live data, live charts, and work, okay, with the best tools and the kind of tools, okay, which helps you to track big money in the markets, right? So this is our current offer. It's going to be live, okay, until November 10. We do a lot of these education programs. Our initiative is always, okay, to talk, okay, about what we know, with a lot of traders, okay, like us, who want to know and who want to understand, okay, how things work, okay, for the broader world of derivatives trading. And we want to be here, okay, because me standing over here and sharing this information with you, okay, I lose nothing, because I have my trading strategy, I have my world of business, okay, over here, and I have, okay, my way of, okay, doing things which are very open. I get asked this question a lot of times, and a lot of my friends also do not understand, okay, how I do it and why I do it, okay. But it's very simply this, okay. I know a lot of people who trade derivatives and who are successful today, and they make a lot of money, right? But money, okay, is not the only driver, okay, of motivation in the world today. After you made a lot of money, what happens? Right? You what will you do, okay, with that money? You still have to stay in one house, you still have to drive one car only, and you'll still eat one meal only, right? But we are here, okay, to talk to you, okay, about something, okay, which we know, such that, okay, we can also get a little bit of recognition for the work, okay, we put in, right? Because beyond money, okay, there's something, okay, called being recognized, getting known. I rather, okay, be a trader who's made a little bit of money and known to help people than a trader who's made a lot of money and just not known at all in the world. So you have a choice. So different people will react differently to what I just mentioned to you. But I am clear that if I help you and if I show you a particular path which has helped me, I do not lose anything at all in showing that path to you, right? So our systems, our ways of working, our charts, our strategies, we are an open book. Okay, we have to put it under a paywall, because things which are free generally are not valued, and the cost is actually very insignificant, because it's gonna straight away take you from what 90% of traders do every single day to what 10% of traders actually do, and you will be able to track their footprints all the time, right? So to support you, we do 2 sessions, Monday and Thursday at 5 p.m. For those who are just doing these charts, we do these 2 sessions so that you further on your understanding of markets. We have something called an e-course program, which is on wetrender.com, the parent website, where you could go in to our e-course section, and you could have access to 12 videos, informational videos on market nuances, market structure. This is the section I'm talking about, the e-course. Now this is not something which is commonly available outside. So I have learned what I learned through a lot of experience in the market, understanding these markets. There is no financial program available in any college or university which can prepare you for what the markets can do. So my understanding of the market has come through a lot of long hours kept in the market, and a lot of failed trades, a lot of good trades, and basically experience and understanding how these markets work. So I've tried to share a little bit of it to you, and these are 12 sessions which are available to you at a one-time registration. It's a e-learning program, more of a DIY, but I highly recommend that you do it, because it's going to give you a good understanding of derivatives trading in the world of 2024. This is not derivatives trading of 2010. This is not derivatives trading of 2000. Definitely not 1990, 1980. This is current information which will show you how big money works and trades these markets, and why you need to understand some of the tools which this big money does. And for those who are looking for a more accelerated part, we have something called the WeTrender mentoring room, which is nothing but using these charts real time and in a live market, and working with you to see how we can interpret the data and the information coming straight to us, right? So this is about active support in market hours. I trade in this room together with a lot of other traders, and it's nothing called a guru speak or a guru mantra, but it is just about an open sharing of information, where you basically understand what to do when a certain bit of information presents itself. So these are the 3 plans we have, and along with each plan you get access to the order flow charts. Along with each plan you get access to the training library of trading strategies. You also get access to our community, and you get access via login via a user ID and a password to this room where we log in every day at about 9 a.m. and we are together till 3:30 p.m. and whatever happens on the charts we take a look at it and we formulate trades accordingly. So this is our mentoring room program, and this is how it runs for us, right? So for those who are still looking at only the chart access, these charts which we have, this offer is going to run till November 10, and these charts are going to keep getting bigger and better, and there is a lot more on the table. You'll have a lot more things which we would be adding going forward, right? So I hope this session was useful in understanding how you need to program yourselves into the market. I'll go back to what I mentioned at the beginning of our conversation. There's going to be a lot of volatility in the coming days. So if you're not coming fully prepared in the morning at 9 a.m., the markets can react as they did early in the morning today. They can react very swiftly and very quickly you will have to be ready early in the morning, okay, to get going with your trades early, because big money is not going to wait for you. The market is not going to wait for you. You'll have to take action, and to take action, the most important word is preparation. You have to, okay, be prepared. Preparation is the job, okay? It's not half the job, quarter of the job, it's the entire job. You have to be ready, and then, okay, you have to have live information, okay, to make sure, okay, that your preparation is on track through the day session also, right? So that's it for me for now, guys. I hope, okay, I was able to communicate. My one message, okay, will be to you as you navigate, okay, the rest of this week. I don't think so one day is going to be connected to the next one. So if there is a bias, okay, which is there on a Monday, okay, get ready, okay, to be able to change that bias on a Tuesday. And if there's a bias, okay, you're holding through Tuesday, be ready, okay, to change that bias on a Wednesday. I foresee a lot of two-way moves with one session not being connected to the next, right? So if you're the person, okay, who likes to carry positions and expect, okay, the data, okay, to continue flowing in the same direction, this may not be the market for it, right? So whatever you do, I wish you the best, and I do hope, okay, you adopt a rock solid process as you work through these next few days. Especially they're going to be tumultuous days, and there's going to be, okay, big opportunity, okay, for us as derivatives traders also, right? So I'll wind this up over here. Whoever, okay, has any questions, okay, please, okay, bring them up to support@vtrender.com or charts@vtrender.com. We will, okay, take those questions over there, right? So thank you all, okay, for coming in. It's near 6 p.m. I'll wish you all the best, and right, happy trading, okay, for tomorrow. Thank you.